The queues are getting longer at petrol pumps in Zimbabwe, but only a few are able to actually fill up. Everyone else is running out of fuel and patience.
I'm tired, I'm angry, and I think somebody should be made accountable. In this case, our government.
Store shelves have been cleared out and restaurants are closed. The few shops that still have bread, sugar and other stock are rationing supplies. And those who've managed to buy groceries today are worried about tomorrow.
Prices are ridiculous, they are too much. And ordinary men like me, from the street, I don't think in the next week or so I can afford it.
Zimbabwe depends on imports for fuel and much of its food, but it's running out of foreign currency and the shortages are sending prices spiraling.
We have a disease in the country called fiscalitis. This is the disease of a government just spending money as if money grows on trees. Now we've got domestic debt that is bigger than external debt. Now we've got a budget deficit that is over 30% of GDP. So we have to cut expenditure.
The country's foreign exchange reserves have dropped to less than $200 million. Most people have been using dollars for purchases, but the government's announced a move back to local currency known as bond notes. And it's imposed a 2% tax on all electronic payments that have gained popularity as managing large wads of cash have become difficult because of runaway inflation. The new tax has sent tempers flaring. The government's banned public gatherings, saying they could worsen a cholera outbreak that's already claimed dozens of lives. But the country's biggest labor unions are threatening to strike, setting them on a collision course with the government, just as the wheels seem to be coming off the economy. Mobin Nasir, TRT World.
And Mobin caught up with Zimbabwe's Minister for Industry and Commerce at the Turkey-Africa Business Forum here in Istanbul and began by asking him what the government's doing to address the crisis.
We had a domestic debt that was becoming a bit unsustainable, and the Treasury took a decision to also reach out to the electronic money transfers. Our economy is almost 80 to 85% informalized. That means 80 to 85% of our sector is not paying tax, if I may put it from a layman point of view. And we are therefore reaching out to be able to raise financing so that we address the domestic debt that is ballooning. This is very critical in order to jumpstart our economic recovery and also to improve confidence from our potential international investors. On the investment front as well, investments in the near future will be approved in less than 24 hours. And we are also moving aggressively to protect the properties of our investors.
At the moment, Zimbabwe is relying on a basket of currencies. What plans do you have to reintroduce a local currency?
And we are using the US dollar more than other currencies. It is quite heavy. Our products are failing to compete if we want to export because of the high value of the US dollar against regional currencies. So it's an option that we will explore quite closely. We may need to look at our economic fundamentals before we introduce our local currency. But it is very critical that in the medium term we consider having our own currency.
Your government has launched a new stabilization program. What are its key components and what does it aim to accomplish?
Currently, we'll be focusing on improving our production capacity, manufacturing sector, our agriculture as well. We wish to assist our companies with the retooling. We are here as part of the strategy to also invite Turkish investors.
So what would be your message then lastly for international investors, traders, business people who might be looking at the country?
The starting point, Zimbabwe is open for business. We have vast opportunities in Zimbabwe from agriculture to mining, tourism, infrastructure, construction, and Turkey in particular can be a partner in all these sectors. So in the next 2 to 3 years, we will be able to substitute imports where currently we are importing particularly wheat and soybeans. From there, we wish to retool to capacitate our manufacturing sectors to be able to produce competitive products. Zimbabwe is indeed open for business, and their investments will be very safe in Zimbabwe.